welcome back. We told you earlier that oil prices edged up, supported by a softer dollar and a U.S. plan to restock petroleum reserves. But the gains were capped by impacts of rising COVID-19 cases in top oil importer China. As we know that China has eased restriction, and the result of that has been more cases and deaths. Yesterday they recorded, I think, the first set of deaths, and we're expecting 3 peak periods of COVID-19 cases in China. Well, let's drill in on this with Dr. Clement Igbanugo, is an economist with financial derivatives, joining us from Victoria Island. Good morning, Dr. Igbanugo. Thank you so much for your time this morning. Is it now a crime for China to ease restrictions? After all, the people protested and asked for it, and now we are seeing that becoming an issue. Now they're having more cases and even deaths.
Yeah, thank you so much, Imi. It's not a crime for China to ease the restriction. Remember that on Friday, after a top policy meeting in which the president assured the world that they're going to do whatever it takes to boost growth, economic growth in China, market became a bit boisterous. Oil price responded positively to that commitment. But we see what is happening, protests here and there before now, and then China decided to begin to lessen its hold on zero COVID policy. But the thing is that China had been hardly hit in this headwind of 2022. Remember that in 2021, its economy grew by 8.08%, but this year, just by 3.2%. And imports grew only by 2% this year. In fact, import declined by 2.4% this year, relative to its growth of over 10% last year. In fact, oil demand or import from China declined by 180,000 barrels per day in 2022. And Chinese export constitutes about 20% of its GDP. And our Chinese trade is about 13% of global trade. So China puts so much for global trade, for demand for oil price. And that is why China matters so much to the world. Of course, we sincerely believe that in days to come, China will do whatever it takes to ensure that containment measures are taken in a way that will not strangle the economy.
You know, sometimes, Dr. I wish that Nigeria, with over 200 million population, we can also determine the price of oil. We are major producers of crude oil on the continent. We have the population, we have the market, but we don't determine the direction of the price.
Yes, fine. We are major producers in Africa. And even sometimes this year, Angola overtook Nigeria. Nigeria just recovered in November. You know, at a point we're producing about 900 when Angola maintained a daily production of not less than 101. But with 1.16 in November, we're coming up. But remember that if you talk about Saudi Arabia, talk about Russia, even the US and all that, you discover that what Nigeria is producing is actually not able to control the market. But the thing is, Nigeria this year have really not had its fair share of the tailwind in oil prices, the windfall in oil prices because of a huge decline in output. In 2020, Nigeria oil output averaged about 1.6 million barrels per day, 2021 1.4, but this year we see where we've been. In fact, what we're having 1.16 in November is a big improvement compared to what we've been having, and this is having impact on our revenue, is having impact on exchange rate, and having impact on a wide range of macroeconomic indicators in Nigeria.
So now that price is rising and output is also rising, it's been up for 2 months now, and hopefully it will continue to grow. Can we expect any, soft landing, especially for the festive period and the beginning of the new year?
Yes, we will if we have if the gains are sustained. But don't forget, like you said in your opening remark, that the softer US dollar is having impact on the market, and also the fact that US is planning to restock because this year, US released about 180 million barrels of oil from its strategic reserve. And it has announced that it will start restocking, and these things start stocking the market. So the estimate for oil price in 2023 projection is around the 89, depending on the institution dishing out the projection, but on average between $89 per barrel and $102 per barrel. So oil price will remain elevated, but may not reach the peak of 2022 in 2023. But if we ramp up production, hopefully Nigeria will be able to benefit from the headwind. Because if you look at this year, the indicators are not really good. Revenue to GDP ratio declined in 2022. In fact, it halved the level of 2021 in a year of oil windfall. Even reserve to GDP ratio declined from 9% last year to 7% this year. The worst is that forex sales declined from 29 trillion dollars in 2019 down to less than 16 trillion dollars in 2022. And that shows you the fact that we've not been able to make significant gains from sale of oil. Why? Apart from the fact that we have oil theft and suboptimal production that has reduced the quantity of oil produced in Nigeria, don't forget that subsidy payment is also taking a toll on Nigeria, on revenue, because NMPC is paying from source. And most of the reports NMPC is giving is that at the time they are giving report at any point in time, they are still owing for subsidy commitment bills that they have not paid. And we're expecting that by the end of this year, it will exceed 4 trillion. And you know what that means. So that has really affected revenue. And if nothing happens to it, I'm not sure that the revenue will ramp up so significantly in 2020.
Yeah, bringing back that bitter pill of subsidy, to be or not to be. We have subsidy, there's a problem. We do not have subsidy, it is also a problem. I wonder which administration will really be able to handle this very big elephant in the room of subsidy.
You know, when you have a price distortion, there's no way it will not affect the market, whether it's in exchange rate, whether it's in oil and whatever, because it creates opportunity for rent seekers to take advantage. The argument is that the oil subsidy is for the poor. But the question is, what proportion of the poor are benefiting from the oil subsidy? What is even the true price of a liter of oil that is being imported, that is being subsidized? And what is even the volume? Because from 2012, when we said the volume of consumption, daily consumption was 30 million liters to 2022, we are now posting 66 million liters. Now, what has happened? What has changed? Economy has even dwindled, because if you look at 2012, the size of Nigeria economy was $455 billion. Today, it's $441 billion. So what have we done so differently that the consumption has grown that much? So you discover that there are a whole lot of inefficiencies in that system. And we truly believe that in 2023, we have no option than to reform. We have no option than to take drastic measures to address most of these economic issues that are holding us ransom.
Yeah, even some people are saying they had expected that with NNPC being commercialized, we would have seen a lot of difference, or there would have been some changes now, but it seems we still have to wait a bit.
Of course, we have to wait a bit because, well, commercialized, but the details are not clear. The structure has not changed. What everybody was expecting was to privatize the NNPC. Let's have private sectors who are committed to running business at profit coming into play. Let NNPC be quoted at the stock exchange market, you know, and let's move a bit from this government dominated process that is somehow entrenching or promoting inefficiencies in the system. So very much we are optimistic that in 2023 a whole lot of reforms will take place and NNPC may be part of it.
Yeah, the NNPC Limited has promised that I think by June, by half of the year, next year, they should be on the exchange and give Nigerians the opportunity to also, have a voice in the running of this oil sector. But let's also look at gas now. The price of gas is also up 0.14%. What's driving that, and does it have any impact on Nigerian economy?
Yeah, so much. A whole lot of things driving the price of gas in the global market. Don't forget that the EU cap on gas price has just been concluded. It dragged so much because Germany didn't want to sign initially because of some issues they have with the agreement and all of that. But yesterday, overwhelming agreement, and by February 15, they will start implementing that gas price. That's the ceiling, that's the cap on it, that it won't exceed 180 euros. If it exceeds 180 euros or $191, there will be a trigger, But there is also a natural issue with the price ceiling, the supply shortage. So when you put a cap, when you put a ceiling on a price, on the price, there could be supply shortages, and that supply shortages could disrupt the market. Well, EU has been running away from rationing, but if that happens, it means they may have to resort to rationing. But of course, they have there are safeguards in the agreement they had that if there is supply shortage, well, they may suspend the price cap. If that is what it is, then it means there may not be more trouble. So market is already anticipating that there's going to be shortages, because if you don't want to sell at the cap, you may have to restrict your product and all of that. So there could be shortages in the gas market, and that is actually driving price, despite the fact that there is a forecast that the weather condition will improve.
And Nigeria hasn't been able to plug into this very pressing need of gas in Europe because it's a long-term, it requires a long-term investment, something we cannot just do at this time.
Exactly. Well, but not really that it's something we cannot do, but the nature of things in Nigeria. We have so much gas reserve that we can plug into this opportunity. But of course, the fundamental constraints that we have in terms of taking a bold step to actually turn around the gas ecosystem. And so far, Nigeria has not been able to do so much. Some African countries like Mozambique and all that are actually rising up to take advantage of this opportunity in gas ecosystem. So hopefully Nigeria also, but of course we are seeing improvement in the gas output in Nigeria, and if much is done to this, I think there's more hope to come.
All right, but this issue of sugar rising because of supply in Thailand and Brazil. Thailand, I know yesterday there was a catastrophic incident there, cost a lot of lives, but I don't think that's why we have this decline in supply in Thailand and Brazil.
Yes, of course. Sugar, we've been having back and forth on the price of sugar, the supply of sugar, because of even the alternative uses of sugar, especially as oil price remain elevated. So the price of sugar will remain volatile even in the coming year.
All right, Dr. Clema. Any other development in the commodity space at this time we should keep our eyes on?
Yes, of course. I think we'll see what is happening in wheat market. Late last week, we saw wheat prices falling after remember that because of the renewed shelling of energy facilities in Ukraine by Russia, the port of Great Odessa was closed, but it opened late last week, and that led to a fall in the price of wheat. But of course, this week we see the price of wheat upticking again because there is the increase of or demand pressure, and that demand pressure is pushing up the prices. And of course, you know what it translates to in Nigeria: bread, the Movita, and all of these things. So import prices and all of this. So that is, and of course, you see inflation. Nigeria inflation has not started tapering in line with what we are seeing in most economies. You see inflation begin to taper in the US, in the UK, in some other sub-Saharan African economies. And so if the price of wheat continue this way and the price of other key commodities continue this way, we'll see that food inflation, which is now at about 24.12, could go higher, and that could keep inflation accelerating.
Yeah, so I guess this, because yesterday we had an association meet and tell the federal government to please implement that sugar tax to help Nigeria. I guess that will help reduce demand for it and reduce the need for foreign exchange that we need to buy this sugar that comes into the country. But I guess we'll have to wait and see how that goes.
Anyway, but that also is a bit dicey in a period of stoking prices, and then you are putting sugar tax, you are putting excise tax on beverages and all of that. That could have a very big impact on the price, because some of these products, they demand elasticity. Some of these products are inelastic in some way, or fairly inelastic. But for those that are fairly elastic, well, that would be effective in reducing demand. But if it's something that is fairly inelastic, that would much more contribute to raising the price rather than raising consumption for those commodities.
All right, Dr. Clement Igbanugo, economist with Financial Derivatives Company, thank you so much for your time this morning. See you on Thursday.
Thank you so much, Shimi. I do have a nice time.
You too.